orange juice has had a record year in 2023 while other markets like grains have slipped. As an Elliottician, do you feel we will see more of the moves we saw in 2023, or do you see a shift coming for 2024?
Well, I think a lot of markets are just getting started in their trends. Orange juice might be closer to an end because of such a large move this past year. And the grains have been slipping, but they're trending to the downside. So again, it depends how we define our terms on that. Those markets could continue lower for quite some time. And they're entrenched, in my opinion, they're entrenched in their trends. And until there's evidence to the contrary, those trends are going to continue. And I know on many of them, the counts I have say there could be a long way to go in these trends. But we watch them every day to see if there's evidence to the contrary on that. And when the markets do rally, because even in a bear trend, you're going to have rallies, does that recovery unfold in a corrective manner? If it does, it keeps the trend intact. But if it follows a different path, an impulsive path, then we start thinking we might have to reconsider that larger view. And that's a key point. We're always open to reconsidering the view every day. That's mostly what I'm doing. The markets are trading, they're trending. I have an idea where they should go. Are they following the path based on the wave principle that I think they should, or are they detouring from that path? Does the detour lead to the same destination at the end? If so, that's fine. Or is that detour a reversal underway, a significant reversal that we need to be aware of? That's the job of an analyst day to day.
Farmers in Germany, France, and the Netherlands have been protesting. India is tightening control on agricultural commodities, and Ukraine is still tangled up in conflict with Russia. How is this affecting the commodity markets, and how can the wave principle help investors and traders prepare the impacts these events have on the markets?
It's an interesting question. A lot of things going on in the world, most of which I pay very little attention to. It's not what's happening in the world. It's how the markets react to what's happening in the world that matters. And that's the only thing that matters. I've seen news that on the surface should be considered bullish for events. Let's just say Ukraine can't send wheat out, through their normal channels. That should cause tightness in the market, but yet wheat at the beginning of the Ukraine war fell. It continues to decline. Why is that? On the surface, the news says the market should go the other direction. So if we're looking at supply and demand, either there's supply coming from another source, or if we're looking at demand, there's not as much demand for wheat. I don't know the answers to any questions along those lines. All I know is what price is doing and the path it's following. Because that's what the wave principle tells me to do. How people react to news differs based on their global emotions, I guess. So at one period in time, a supposedly bullish event might lead to the market advancing, and at another time, the market will fall despite that same news. It's all of how it's interpreted.
We're seeing a lot of legislation on climate change directed at farming and commodities going forward. How can the wave principle help prepare investors for the changes these legislations will cause in the commodity markets?
To me, they can do whatever they want to do, make whatever decisions they want to make. The market is going to react the way the market wants to react, irregardless of their decisions. So watch price, be familiar with the wave principle, see what patterns unfolding, where you are in the Elliott Wave progression. You make your future forecast based on that. I very rarely pay any attention to the news. That doesn't mean I'm not watching the news. If I'm watching commodities, which I'm doing now, and they start talking about commodities, a particular commodity quite a bit, my ears perk up because usually no one talks about commodities. The news talks about stocks a little bit. Going into commercial break, they say the Dow was up or down. The S&P was up or down. NASDAQ was up or down. Maybe Apple announced their earnings, and that is it. It's not a major story. Commodities get no coverage, virtually, unless it's something major. So if I'm listening to the news and all of a sudden they're talking about commodities, even a hint, my ears perk up, what's happening? But that doesn't mean I'm paying attention to what they're talking about. I'm going to look, if they're talking about cocoa, I'm going to look at my cocoa chart and see if the price is moving a direction different than what I thought it should. I'll give you an example of an interesting, fun example of it would be, it wasn't government, but back in the 90s when I followed commodities the first time around, we tracked coffee prices from around 90 cents up to $3.16. A huge move, I think we'd agree. At the very end of that move, Jay Leno, the host of The Tonight Show at the time, made a joke about coffee prices in his opening monologue. As soon as I heard him make a joke about coffee, I knew the rally was over, or very close to an end. The next day, we wrote a special report about coffee prices. We highlighted all the ideas why the move should be at an end, even though we've been bullish for months. The market topped within days. I think it dropped down to about 40 cents afterwards. And we based a lot of it, we had all the the Elliott Wave reasons, but the wave principle tracks human emotion. And when Jay Leno made a joke about coffee prices, I knew this is the end of the line for this coffee rally.
If you want to learn more about the Elliott Wave principle and Jim's analysis on commodity markets, check out Commodity Pro Service and Commodity Junctures at elliottwave.com.